Good afternoon, ladies and gentlemen. You're watching the Stock Market Brief Show. We had ourselves a wild trading session today. We're going to get into that on today's Stock Market Brief Show and introduce to you a signal chart that I have been working on to find shorter term pivots in the market, and they're starting to light up as it stands right now. So it's going to be interesting to see how this one plays out. But let's go ahead and hop into today's show. All right, ladies and gentlemen, welcome back to the show. This one's going to be fairly quick and to the point because, I'm not trying to produce a lot of fear out there in the markets, but today's price action did plenty of that for all of us. These were the expected moves yesterday's trading session. And one of the things that I posted out here on X was, let's not get overly excited, bulls. Let's focus on risk and have a clear mind. Tomorrow's daily expected moves are humongous. And that they were. We had an $11 expected move that's plus or minus on the Qs. Okay, and we hit that, right? Look at the SPY. We actually started the day outside of the daily implied move, and we reversed and closed not only outside of the weekly, but outside of the daily implied move there too as well. So this is massive movement in these markets. And today's daily candle, talk about just a massive reversal kind of twinning over here with this candle over here. And then we had, a little bit of a pop up. And this happened to be on some big volume. This chart that you're looking at here is one of my just potential trend changing indicators. It's really good at helping to find bottoms, but yet for tops are very hard to predict and stuff. They're crazy, but it gave us an early indication over here that the trend may be changing. And just take a look, we're up and we went higher, but we've been running into volatility ever since. So we're only about 1% or 2% away from that. Now, I want to keep it right to the point. Tomorrow's daily implied moves, this is something that I send out to my Discord community, but given the volatility, I figured I'd share it here. If you're interested in the Discord, it's $16 a month. It's nothing, crazy. And I give all types of benefits that I'm going to have to talk about on another episode. So if you want the daily expected moves, screenshot this. You have your upper expected moves, your 2 standard deviation expected moves right there. Okay, SPY, $9.40 of expectation tomorrow. Qs, $11.70. So we're talking bigger expected moves. These expected moves you typically see on a weekly basis. This is a huge blowout in implied moves right here, just massive moves. And if I show you what that looks like on a chart, that means that if we come screaming back up over here, that would just be the upper daily implied move right there, back to where? The week-to-date volume-weighted average price and a declining 5-day moving average, still well below a November VWAP. And then down beneath us is the lower daily implied move, roughly at about 643 and some change. Okay, this makes sense to me, right? In this type of environment, when you're below the gamma flip line, which we try to go for today, when you're below that, dealers will buy into buying, they will sell into selling. It creates two-sided trade and you get explosive moves, which we have really been seeing since we slipped under that gamma flip line. Okay, going into tomorrow's for the SPX, we have our lower daily implied move here. We're outside of our weekly and our monthly currently as it stands. And I want people to pay attention to and around the 6,500 level, just because this happens to be a large gamma exposure level. Now, we do have a option expiration, so we'll see what this looks like going into next week later. Now, we've also been talking about how CTAs can become sellers, and you can see right here, what do you think's adding to this sell side, right? It wasn't really news driven, right? There was some BLS report after the selling already occurred that, they'll be getting the November, December numbers or something like that, whatever. The narrative comes out after, but today felt very systematic, like vol control funds, CTAs, selling into this selling, and then we have our conditions underneath that gamma flip line. Now, here's a cool chart by Nicholas Savino that I have been sharing recently because, I don't know, I just kind of find this stuff cool, but it has been tracking fairly well. And even today where it finds that high point, right, it did find a nice little pop up there, but then we closed at the lows and it says, roughly at about, this is the weekend, this is a weekend right here. So we have one more day left, right? And then all of a sudden, potentially into next week, we get some sort of a face ripper rally. That'd be kind of cool stuff. Okay, so I want to get into my bottom finding chart right here. And I'm not going to be giving you like all the proprietary data behind all of this, but what I can tell you is this. We go over a lot of various signal charts to find shorter term movements, whether that's to the downside or upside, oversold conditions in the markets. So I took a combination of these and I did a percentile rank over the course of many years to find out what might produce various results in overextended and or oversold conditions. And what I came up with was this, a great tool for helping find shorter term bottoms. And you might be thinking, well, what data are you using? Well, Look at, back month versus front month volatility. This is one of the data sets that I like to use all the time in these shows. And when it gets below 1.0, right, you start to look for potential bottoms in the market, right? We've seen that many, many times. And when we get above 1.20, you start to look for consolidations. So I'm still going to share these charts and everything, but this is just for an example, one of the inputs that I put into it, one of the many. And if we take a look now, I just produced a reading on this indicator coming into just above 15, right? So just above 15. And if you look back through history, we've seen many different times, right? This is dating back to 2021. It's fairly rare to come into this area. And when we do, the question then becomes, well, what happens? So I'm basing it off of this particular reading right here. And I want to put it overlay on the S&P 500 of the times that we produced this reading. And this is once again dating back to 2021. And as you can see, we just produced a dot right over here. We produced 3 or so dots here at the bottom, a couple right here. We produced 2 dots right here at this bottom, a few over here. Here we had a combination of, quite a few dots before seeing a little bit of a rally out, and then it sold off more, right? And then we got some more dots. Over here, we started getting clusters of them at this bottom. And then in 2022, right, we saw over here a nice pop, but then we started, after all, we got a lot of volatility in here, and we started getting clusters of many dots before trying to resolve itself to that bottom. And you can see many different times, right, that's been the case. Now, I looked at this also with just a 15 reading, and you can see that dot there gets removed. But if I go back and forth between the two, all I'm seeing change is just a few dots every once in a while throughout here, and here. So I thought that it was cool. And the reason why I'm bringing this up now is, yeah, we can find some shorter term capitulation. We have apparently a cycle chart that shows that too. We're moving into a bullish period. And this is exactly what you might see, a flush out before seeing some sort of a rally. Now, with that said, right, we're still below declining 5-day moving averages. We're still below declining 5-day moving averages. We're still in negative gamma as it stands right now. We have the ability for CTAs to continue to sell side and vol control funds as well. So this all adds more pressure to the market. So the number one focus that you have to do is manage risk. For example, in today's trading session, right, what was I doing right out of the gate when we saw this big gap up? Well, in these market conditions, I am forced to sell on these big moves. So for names like Meta, Amazon, some of that I talked about in the prior brief, we saw a nice big gap up in the morning. And the whole point here is to, right, focus on risk. Don't get overly too excited in these conditions, and keep your trade size small and be very, very diligent with how you approach the market. So hope today's episode helped out. Let's see how these signals play out here in the very near future, getting this oversold, if we can produce some sort of a bounce in the very near future and kind of follow this, cycle chart here. That's all I got. I'll see you later.